Do it to the cloud. Well, good evening, everyone. Good evening. My name is Celia Lowe, and I am the president of the Alpha Beta Gamma Omega chapter of Alpha Kappa Alpha Sorority Incorporated. I want to welcome you and thank you for joining us this evening for what promises to be a very, very, very informative event about credit score management, something that we can all benefit from learning more about. And this is going to be an awesome presentation. This falls under one of Alpha Kappa Alpha's targets. So we are excited to bring you this informative presentation, and hopefully you will learn a lot and we'll have an opportunity for Q&A. And with that, I am going to hand the microphone or pass the pearls to our awesome Vice President and Program Chair, Sir Kiki. Sir Kiki.
Yes, thank you so much, Madam President. Good evening, beautiful people. I'm Shakitha Jeffries, Vice President and Program Chairman of Alpha Beta Gamma Omega Chapter. On behalf of all the members of Alpha Beta Gamma Omega Chapter, welcome to our Credit Score Management Workshop. As you heard from Celia, this program aligns with Alpha Kappa Alpha's international platform, which is Target 3, Building Your Economic Legacy. And under this platform's chapters throughout the sorority host various programs that emphasize financial planning, asset accumulation, and wealth building, including savings and investments, managing debt, and improving credit. So tonight, during this workshop, you will hear from our wonderful facilitator, Paul Farrell, Community Relations Specialist at Security Plus Federal Credit Union, who will teach us what a credit score is, the importance of that credit score, and how to read a credit report. He'll also teach us or give some of us a refresher on how to maintain a healthy credit score and how to repair, I wouldn't say bad credit, but how to improve your credit if it has slipped. So without further ado, I'm going to turn the floor over to Naya Johnson, who will introduce our guest speaker for the hour. Naya.
Hello, everybody. Good evening. So Paul Farrell, he is a transformational leader, well-rounded individual. He currently serves as the Community Relations Representative for Security Plus Federal Credit Union, a Baltimore-based credit union. Through his current role, Paul equips individuals with the tools to positively change their financial future. While doing so, he also partners with businesses and community groups to foster a better community. His passion to help people started during his work during his own business venture. Paul helps startup businesses and nonprofits to grow their online presence through his firm as CEO of Farrell Communications, LLC, creating dynamic websites, social media graphics, and producing and managing virtual event experiences for his clients. Paul formerly served as the administrative assistant for the NAACP as the lead graphic and web designer for NIW Design, LLC, based out of Laurel, Maryland. He also has a background in the rental car industry through his role as management trainee for Enterprise Rent-A-Car for nearly 2 years. As a recent college graduate, Paul served through a number of leadership roles as a resident assistant, athletic equipment coordinator, SGA senator, president of Crew, admissions fellow, and manager for over 7 collegiate teams. Paul's leadership earned his introduction into the Social Impact National Honor Society, granted by his faculty and peers, a prestigious communication commencement award, and a faculty student board position at Stevenson University. Let's welcome Paul Farrell, everybody.
Hello, everyone. Good evening. I am super excited to share our evening together to talk about some amazing things tonight. I just wanted to first just thank everyone for attending today's seminar. We are going to talk about credit scores, obviously. I hope that you learn a lot from this presentation, but we're also going to engage, right? I believe in engaging throughout the seminar, and I'm going to launch some polls. I'm going to have great examples as well. So look out for those. And I also just wanted to say, give yourself a round of applause for attending, right? Because a lot of the work is started by showing up. And so we just wanted to say thank you for showing up today. All right, so again, you heard a little bit about me. My name is Paul Farrell, again, Community Relations Representative. If you ever need to reach out to me, my email, phone number are here. I'll also come back to this slide just in case you want to reach out to me directly. But before we begin our presentation, I kind of wanted to speak to the credit union. I know a lot of people may be familiar with credit unions, may not be familiar with credit unions. And so I'm just gonna tell you about Security Plus, right? So we kind of have 4 pillars of who we are, right? We are member focused. That means that we offer members far more than just banking. We want to be a part of their life. We want to walk them through different things that happen in their life, whether they're trying to start a business, need a scholarship fund for their kids. We don't look at our members as just numbers. They are more than a number to us. Obviously, we offer financial solutions. We believe that we offer old school banking in a new world market, right? And so we're always trying to pivot. I know a lot of people don't like that word. I love it, but we always try to pivot to new trends in the industry where technology advanced, obviously, and we are community proud. One of the main reasons why I was hired is to really make a difference in our communities, right? During the pandemic, we saw a lot of people, including me, knocking on big corporations, knocking on bank stores saying, what are you going to do for our community? How are you going to show up? And so I think that our credit union did a good job of hiring people like me actually come out and speak and educate people who look like me, serving communities that are underserved or underbanked, specifically in the Baltimore City community. And so I am super passionate about helping people and changing lives. So that is my main focus today, is to help change your financial future, right? All right, just a little bit about the numbers here. So we have 35,000 members across the US. And because we have a lot of members, we also need a lot of ATMs. So if you're familiar with credit unions, we use a system called Allpoint, where you can actually locate an ATM no matter where you are, Vegas, Colorado, Iceland, like anywhere. You just pull up that app. Obviously, we have a member equity total of 500 million, as you can see by the slide. We were chartered in 1938 with the Social Security Administration, and then we later branched off, and we have insurance on our accounts just like everyone else. We are insured by the NCUA by $250,000. All right, so now we got all of that out of the way. Let's kind of talk about some quick facts and disclaimers for our conversation, just so I can set this stage and you guys can understand some of the terminology I'll use, etc. So one of the phrases I'll use today is FICO. FICO is the Fair Isaac and Company scoring model. FICO had a patent on their scoring model. And so everything that they kind of communicate is proprietary information. Because of that, we hired CU Strategies, which is a company that helped us to validate the point system. And that's what I will refer to throughout our presentation today. But because FICO has a patent on their formula, we obviously don't know the exact formula to a T. So what we did with CU Strategies is we looked at individual credit reports to see if what we are providing to the community works. And it did. We helped one of our employees raise their credit score to an 850. And so that is one of the other main reasons why I love what I do and what I'm here to do today. It's to help everyone get in the 700 club. We call it the 720 club. So that's a good club to be a part of. I know everyone wants to be a part of that. I sure want to be a part of that. I am a part of that. And my goal is to get you there today as well. You also see the plus and minus sign throughout the slides. That just gives a range of anywhere from 5 to 15 points. And again, everything that I provide to you are not guesstimates. They are calculations based on actual data, our members who we validated this system with. Okay, so that was a lot, right? So today we want to help you understand how your credit score impacts your life and ways you can improve your credit activity to positively change your financial future, right? So some of the topics of discussion we'll define what a credit score is and how it's calculated. Again, understand the importance of credit scores and reports. We'll discuss how lenders use your credit score. I'm going to spend a lot of time on this because I believe that in our community, we don't have this knowledge. And I want everyone to think about credit from a lender's perspective, not so much of a consumer perspective. All right, and we'll uncover some quick tips and strategies to build and improve it. And we'll also identify how to protect your credit score. we got you to 720, right? Now we want to keep that score. We want to maintain it. So we'll talk about ways to do that as well. All right, so guys, I said this is going to be a fun night. This is going to be amazing. So I'm going to launch a lot of polls. This will be the first one. All right, so this is just from my general understanding. This poll is, do you know your credit score? All right, so A is, I know my exact score. B, I have a general idea. C, I don't know it. And D, I don't even know what credit score is. All right, so you can launch this poll now. Just answer number 1 for me, please. I'll give you guys a couple of seconds.
If you can see the poll, can you shake your head? Give us a wave on the screen. Yes? Okay. Excellent.
Thank you for that. And if at any point of the presentation you can't hear me, please flag me down, raise your hand. Okay, I know my exact score. Okay, I don't see anyone answer it, but that's fine. Let's end the poll here. Okay, so now that we kind of have a general understanding and I can understand where you guys are coming from, let's kind of talk about what a credit score is, right? So a credit score is obviously a 3-digit number that tells a lender how likely you are to repay a debt. Very simple. We've obviously defined this widely from financial institutions to FICO as 5 different credit score ranges, right? So 300 to 579 is poor, 580 to 669 is fair, 670 to 739 is good, 740 to 799 is very good. And then obviously the top echelon is 800 to 850 is deemed as excellent. All right, so kind of understanding the purpose of the credit score, right? So they were designed to also price loans, which directly impact your payment. A lot of people say, well, why do I even need this information? Like my credit score is good. And we'll kind of talk about that as well. They do impact your loan, your payment, but they also impact other areas of your life. All right, just some quick things to know about your credit report. So whenever we as a lender or a financial institution take your credit score, that is a snapshot of your credit risk at a particular part in time, right? So a lot of people, they'll go on Experian or all of the, I'm trying to think of others, Credit Karma, et cetera, and they'll look at their score, it's at like a 720, but then when they look at it the next day, it's changed. And if they try to do a loan based on the score that they pulled yesterday, obviously it's going to be different. So we always want to keep that in mind, that your score can change whenever your credit report changes. And that generally takes anywhere from 60 to 90 days, typically 30, but we just want to give a little bit of buffer because you never know how your lender or institution is reporting the activity on your credit report. And it also determines your credit worthiness, right? All right, so here's a little bit of a quiz. Let's see who's paying attention. I kind of gave a quick nod to this answer. All right, so what is the official credit score range? All right, A is 250 to 800, B is 300 to 850, C 450 to 750, D I don't know. So we can launch the poll.
And Paul, just as a quick side note, we saw some folks in the chat who said they were not able to answer, but we are encouraging them to drop their responses right in the chat box. So we will have,
that's perfect.
We'll try to navigate around any glitches. Thank you.
No problem, that's perfect. All right, I'll look in the chat too. Let me see what some people saying in here. B, okay. All right, let's see what the answer is. Thank you so much, tech team, for launching that poll. So the answer is in fact B, 300 to 850. If you got that right, pat yourself on the back. Kudos to you. All right. So another point of discussion here, so I'm just clicking out of this, is obviously a good median score is 723. I talked about that earlier. And also, again, the range for a credit score is as low as 300 points to 850 points. Now, a couple of two things that you need in order to generate a score. So you need at least one trade account, right? So that's a loan or credit relationship that has been open for 6 months or longer. So say that you are just fed up with credit. You're like, man, this is annoying. I don't want to deal with it. You had a credit card for a year and you decide to close it out. 6 months go by, you try to get a car, and obviously you don't have a good score. Why? Because you didn't have any loan or credit relationship open for 6 months or longer. That's why we always say never close out your oldest trade line, never close out your oldest credit card, etc. Always keep those open, even if you've been on your parents' credit card since 12. Just make sure they keep that open because that can also impact, your score. And the second thing is you need at least one trade account that has been reported to the credit reporting agency within the last 6 months. All right. All right, now these are 5 areas that also kind of tally up into that 3-digit number. So a large portion of this is 35%, and that is your payment history, right? So any on-time payments, any delinquencies, I'm gonna show you guys an amazing graph today that really emphasizes this point, because a lot of people, you may be hearing these percentages and, well, what does that really mean to me? On-time payments is the biggest way that you can take your score in 6 months. So please, please, please pay attention to that slide. Be mindful of that when you're out here and doing things on your credit card, et cetera, or any type of bills, even medical bills, pay those on time. 30% is capacity as well. So your balances in relation to your limits on revolving debt. We'll kind of speak to that as well today. And then length of trade lines is 15%. I just talked about that. So, not having anybody close your credit card if you've had that open for 10 years, et cetera. And then 10% of your credit score is mix of credit. So revolving, installment, mortgage, and then new credit, which is inquiries and new trade lines. So I'm going to throw just a quick gem out here just for this point. So not a lot of people know this, but every time you allow someone to pull your credit, you actually lose 15 points in your credit score. Yes. So you lose 5 points on the inquiry and 10 points on the trade line. Doesn't matter, you'll lose the 15 points. So obviously be careful of who you are allowing to pull your credit. Now, when I say this fact is for hard inquiries, soft inquiries that you get in the mail, et cetera, that doesn't count. If you do a credit score consultation with Security Plus, we do a soft pull, that doesn't impact your credit score because obviously you're not taking out a loan or a credit card, but anything that is directly tied to a trade, so a credit card, a loan, et cetera, you're gonna lose that 15 points, okay? All right, so that was some good information, right? I hope you guys enjoyed it. So now that we understand the foundation of credit scores, reports, and how it's calculated, let's move into why it is important and how it impacts you when it comes to buying a car and many other big purchases in your life. All right, so I'm going to use a lot of stories today, right? I believe in stories. I think they're powerful. In the Bible, Jesus used parables, so not him, obviously, but I'm going to use stories to further illustrate my points today. All right, so I'm going to talk about myself, okay? So this is the story of Lizzie and Paul, okay? They are newlyweds. They decided to get a car to prepare for their commute to their new home. So they got a lot of big things going on, a lot of big things. The summer just passed. Everyone knows that there's like a lot of weddings. So this is their story. All right, the couple both have jobs that pay $50,000. All right, same job, same marriage. All right, they went to the dealership to purchase the vehicle, and Paul was quoted a higher monthly payment and interest rate than Lizzie. Based on everything that I presented today, why do you think Paul's payment was higher than Lizzie's payment? Now, this isn't a poll. I just want you to throw it in the chat. Just let me get some feedback. What are you guys thinking? Talk to my team. They were confused. We were kind of confused. Why do you think Paul's payment was higher than Lizzie's payment? They both have the same job, make the same amount of money. Let's see. All right. His credit score was lower than Lizzie's. Natalie, you got it correct first. Okay, kudos to you. All right, so this slide here is very important and it is so impactful. So that answer was correct, obviously, right? So as you can see, there's two graphs here. So Paul's score is on the right, Lizzie's score is on the left. So it's just a 100-point difference. Paul's credit score was a 620, Lizzie's was a 720. All right, they went to get that loan for $25,000. The same term, 60 months, which nobody does 60 months, everyone does 72 months now. But the main difference and what I kind of wanted to highlight and emphasize for us today is the interest rate and payment. Now, a lot of people say, what is interest rate? Why does that matter to me? And here's why. Paul's interest rate was 19.25%. Lizzie's was a 2.99%. That translates into their payment, right? So Paul's payment for that car was 200 plus more than Lizzie's. Paul's payment was $652 and Lizzie's was $449. Now, what's really mind-blowing to me is the amount that they paid over the life of the loan. Paul would have cost their marriage $40,000 for a $25,000 car. Like, come on, that is crazy. Where Lizzie would have only cost them what? Close to $2,000 over the price of the car. So I guess to me, like, where do you want to be? Do you want to eat peanut butter and jelly sandwiches in your new marriage, Paul? Like, come on, you got to get it together. So, that's the power of the work that we're able to do. If you ever find yourself in this situation, it's not the end of the world. We can help. We actually offer something that's called a free credit score consultation, where we do a one-on-one consult with you, teach you how to raise your credit score, lower your monthly auto payment. So this example is perfect. Eliminate any high interest credit card balances and obviously protect you from any predatory lending schemes. And so today, what if we were able to do that after this conversation and I was able to save you $12,000? Because that's literally what's happening here. If you have a credit score of 720 versus 620, you're going to save $12,000 over the life of the loan. So what could you do with an extra $12,000 this year in your savings account? If you're like me, hey, listen, I'm going to Stadium Goods in New York. I'm about to get some shoes. For most of us in here, some of us, there's probably traveling. What could you do with an extra $12,000? Just put it in the chat. I just want to know. Somebody said vacation, invest. Okay, pay off debt, start a business. I just got my girlfriend a Telfar bag. I'll probably buy a couple more, All right, invest, family vacation. Okay, college tuition, that's a good one. Great. So the next example, in order for us to understand that, we just kind of need to define capacity in relation to your credit cards, right? So capacity is how much credit a person has used. All right, it represents a significant portion of up to 30% of your credit score under the amounts used category. All right, so the way that we as lenders or financial institutions generate your capacity is we take the total balances on revolving debt and we divide that by the total limits reported on your lines of credit. Not only that, but when it comes to credit card capacity, that could impact your credit score up to 50 points, okay? All right, this next example is Lizzie and Paul again. They're back. I know, they're back, kind of getting annoyed at them already. So they are doing some Black Friday shopping. All right, I'm gonna use the example of a Samsung touchscreen fridge because I saw this in the commercial. Okay, so they were kind of contemplating it and Cyber Monday comes around. Lizzie's like, hey, babe, you want to go get that fridge again? Today the sale ends at 12, but the credit card had a $10,000 limit and a $2,000 remaining balance left to spend. So they're obviously preparing to get this car based on the last example, right? Should Paul and Lizzie purchase this brand new fridge before purchasing their new car? What do you guys think? Throw it in the chat. I don't know. All the celebrities kind of have the touchscreen fridge. It's kind of dope. I don't know if you've seen it, but you can text from it. And I think you can pull up Facebook. So if you were cooking tonight, you could watch the Facebook Live on my presentation. Okay, I know for me. Sounds like American Idol. It's a no for me, dog. It's a no for me. All right, so I agree. And here's why I would say no. All right, so the balance Paul owed on all his credit cards was $2,000, right? So it was super low. The total limits on these cards are 10,000. So obviously you would take the 2,000 divided by 10, and that's how we get capacity. Very simple. So he has 20% capacity. A good rule of thumb is keeping that under 30%. And I kind of highlighted it as well on this slide. So the higher the percentage of capacity used, the lower the credit score, right? The higher the percentage of capacity used, the lower the credit score. I forgot to mention my helpers today on my slides. You'll see these 3D figurines, kind of let you know and kind of guide our conversation what the right answer is. And then this is obviously wrong, right? This is after they bought the fridge. The fridge costs $8,000. It was just crazy. And they ended up maxing out their credit card. So they had 100% of capacity used. Now, a lot of people in this room may have one credit card, 3, 4, 5. Whenever you max out your credit cards, that impacts your overall capacity. So even though you have a $2,000 balance on one card and you have maxed out another card, that will impact your total score. So just keep that in mind. And then obviously, the higher the percentage of capacity used, the lower the credit score, but the lower the percentage of capacity used, the higher the credit score, okay? All right, so hope you like my 3D card here. I also hope that you're paying attention. So how many points will Paul's score drop if he maxes out his credit card? Okay, so A is 15 points, B is 10 points, C is 5 points, and D is 50 points. Thank you so much, tech team. You guys are amazing. Launch that quick. Wow, I didn't even get a chance. Let's go, tech team. I love it. Okay. All right, guys. Oh man, I'm so disappointed. I was looking at some of these answers. Give you a couple of seconds to answer.
Don't be disappointed. We were looking at the car. Don't be upset. We got distracted.
Oh man. Yeah, you're right. Okay. So looks like answers still coming in. Let's end it. All right. So I was going to say it's 50-50, but I ain't look like it's 50-50. All right. So the right answer is D, 50 points. Yes, that's crazy. So always be mindful of that, guys. Whenever you max out your credit card, you will lose 50 points on your credit score. Okay, so always keep that in mind, especially if you only have one credit card, that's more likely to drop 50 points. Now, obviously it's a range, but it is on a higher end. Now I tested this out because when they trained me, I was like, I don't believe that. I tested it out just because I wanted to validate it. And this is actually true. Your score will drop 50 points. So obviously just be mindful of that. All right, I have another poll. This one is gonna kind of age me a little bit, but it's okay. All right, so what rap artists mention the negative impact that maxing out credit cards can have on your credit score? We have A, Drake. I don't know if you guys listen to the last album. I listen to it every day. I can't stop. I know what's going on. B is Rick Ross. C, Justin Bieber, which I kind of like Justin Bieber. I'm not gonna lie. During the pandemic, got bored. And I was like, let me check this guy out because everyone keeps talking about him. I kind of like his music. He's pretty cool. And D is I don't know. All right. Got some answers. It's 50-50. Now, the last presentation, they got it all right. So I don't know, guys. This ain't looking too good. But the right answer is B, Rick Ross. Yes, Rick Ross, the boss. Talked about that. If you got that right, pat yourself on the back. Yeah, so even rappers know the impact that maxing out credit cards can have on your credit score. And also, just trying to keep with the Joneses. Like, I'm pretty sure they experienced it. He talked about how the Discover card messed up this young lady's credit. And so, she was maxing out, going to different stores, whatever. All right, so we learned what a credit score is. We learned the importance of a good credit score. Now let's discuss how lenders use your credit score and uncover strategies to build and improve your credit. All right, so based on everything I presented, I just kind of want to give a little bit of a temperature check here. Do you know how to manage and protect your credit score? Just based off of what I presented today. A, I know how to. B, I have a general idea. C, I still need help. D, I don't know what managing and protecting it means, Paul. We mean protect and manage it. What does that mean? So let's launch this poll. Give you guys a couple seconds to answer that, just so I can know what pace everyone's at. Okay. You can put it in the chat too if you don't see the poll. Oh, there we go. Thanks, tech team. Appreciate you. All right. I know how to. General idea still need help. Okay. Couple people. All right. Thank you so much, tech team. That's good information. Thank you guys so much for participating in that. Okay. All right. So I talked about this earlier. So in the eyes of lenders, in the eyes of the big financial institutions. So again, scores above 720 are considered excellent, and an excellent sign of financial health. You'll most likely get the best rates. Typically, if you fall above the 720 range, you also won't even have to have anybody look at your credit report. They actually have systems now where they approve you automatically, which I don't know. But if you go to a dealership, you most likely won't even get shopped around as much as well. Scores between 680 and 720 are considered good, but you may pay slightly higher rates. Think of this example: when I graduated college, I got a car, had a good score, but my interest rate wasn't where I really wanted it to be. Just kind of make it a little bit more practical. Scores 620 and 680 are moderate. Kind of looked at a little bit more closely, you'll pay higher rates. And then a poor score is considered anything below 620. This means that you'll most likely pay higher rates, and you'll also most likely go to subprime lenders. And in our community, in the Black community and brown communities, you see this often. You see cash checking, check cashing places. I don't know why I flipped that. And then you'll also see payday lenders. So these are some of the kind of tactics that we see with people who have scores that fall in this range. Also, just kind of some quick facts here. So you will also most likely use subprime lenders, and I just kind of wanted to name them. Typically, we don't, but I really wanted to, just so you guys can know if you're in doing business with any of these. So Santander Bank, OneMain Financial, Landmark, and Credit Acceptance. Just be very mindful of these lenders. If you're ever late, if you have a payday loan and you don't pay it on time, your interest rate could raise to 200%. And I'm not lying. Like, that is an insane amount of interest. Like, I honestly think it should be illegal, but it's real. It's happening in our communities. And so we really wanted to highlight that for you guys. All right, so this next slide is really, really simple. A lot of people know who the three major bureaus are, but 90% of US financial institutions use FICO scores, right? And there are three bureaus, and the three are Equifax, TransUnion, and Experian. And they all report to FICO. All right. Another thing about loans and approvals in the eyes of lenders is your debt to income ratio. So not only is your credit score important, but also your DTI is what we like to refer it to. So we calculate your DTI by taking the total monthly payments divided by your monthly gross income. So on your credit report, we can see a bracket of all of your debt and then how much you make, and then that's how we get your DTI. So obviously it doesn't include living expenses, such as utilities, cell phone, etc. And a good guideline is 45%. All right, so just keep that in mind. Now, I can't really see you guys, but by show of hands or just internally, who has ever pulled their credit report and it's been different across all three bureaus? So Experian, it's different, etc. Okay, I see. Oh yeah, you can use the chat to raise hands. I forgot about that. Yeah, okay, I see some people raising their hand. All right, so here is why they may differ. All right, so the way lenders and businesses report information to the credit reporting bureaus, or what is reported, and this is why they are different, right? Because sometimes they don't report the same type of information. I don't know why. You always want to be mindful of who you're doing business with. Another reason why they may have been different is the time frame in which the information is recorded. So sometimes TransUnion or Experian may still report the same thing, but in different timelines. They may get it in different frames, but also they have 30 days to report it. So although one of these subprime lenders recorded some information, one of the bureaus could take their sweet time and it may not post until 30 days. Lastly, the bureaus may also record the same information in different ways. Now, obviously, this is one of the flaws in the system. We don't know why they report this way, obviously, because they have a patent on their score. Okay, there are also another reason why your scores may have been different. And this one I really wanted to highlight by our next example. And that's because lenders use your credit score by 3 different scoring models. Yeah, so lender scoring model, which is more widely used with financial institutions, is the lender scoring model, one that we just talked about, right? This is most widely used. The consumer scoring model is what I talked about earlier. So these scores you really want to be careful of. So this is anything that you pulled yourself online. So these scores are generally inflated. Okay, they could be anywhere from 5 to all the way to 20 points inflated, just obviously a range. So you never want to make a credit decision based on something you pulled online. You are not, with all due respect, you are not a lender. And so if you want to know your actual score, you can come to Security Plus. You can ask one of us. You can use our mobile app. You also have it in your financial institution banking app as well. So I would make a decision based on whoever you're doing business with as far as your financial institution. There's credit score simulators in our banking app. I can't speak to other institutions, but that's a free service that we provide to help out the community. But I really wanted to spend some time just touching on that. And then lastly, the auto enhancing scoring model. All right, guys, now I got a lot of dealership hurting me. So this next slide is going to kind of talk about that a little bit, but this is what's most widely used with auto dealers. And these scores can be slightly inflated. Okay, so we're going to talk about Lizzie and Paul again. This is our last story. No, cry. So this is an example of how dealers will kind of abuse you. But Paul and Lizzie, they met with Security Plus because they heard this presentation. They said, man, this guy, he knows what he's talking about. We're going to go see him. So they went, they got a pre-approval for a car loan. And so later that day, they walked into the dealership. They were told that by the dealer that he must finance with the dealership in order to drive off the lot. First red flag. Second, he also, the dealer, told Paul that his credit score was extremely lower than what his credit union explained to him. Second red flag. All right, so based on this, we're gonna launch another poll. Hopefully I put this one in here. What scoring model do you think was used when Paul applied to the dealership? All right, so A, consumer scoring model, B, general scoring model, C, auto enhancing scoring model, and D, none of the above. Oh, guys, man, I was really confident we would get everything right. No, this one's not right for most people. Oh, guys, man, I was confident. All right, give everyone a chance.
A for effort, though?
yeah. You get an A for effort. You get an A for effort. You get an A for effort. I'll give you that. Okay, thanks, guys, so much. Thank you again, tech team, for launching that poll. Okay, the answer is C, auto enhancing scoring model. Now, you guys may be like, what the heck? What's going on here? So be mindful when you are doing business with dealerships, because when they use the auto enhancing scoring model, if you've never purchased a car before, this is your first purchase, your credit score will be lower than what you were quoted by your financial institution when you got that pre-approval letter. I know it's kind of wild, it's insane. I had a personal experience of going to a dealership and was told that my credit score was extremely lower. Sometimes we've all been there, right? And so you just want to be mindful of that whenever you're looking to buy a car. Our suggestion is to shop around with credit unions specifically because we have lower rates. I'm not even saying Security Plus, like you can go anywhere to any credit union to get a pre-approval letter. We're most likely also willing to take a chance on you with your first car purchase. If you go to a dealer, they may shop you around as well. And so that means shopping you around means they'll pull your credit score to different lenders. We'll kind of talk about the inquiry side, but If you're trying to get a loan, they may shop you around to 15 different lenders. Now that counts as one inquiry on your credit report, but also keep that in mind. Also, don't ever feel forced to take a dealer's financing if it doesn't feel right or the interest rate is super high. They can't make you take their financing to drive off the lot. If you ever have been in a situation though, please don't lose hope. You can always refinance with a credit union to get a lower interest rate. Okay, we are at the final stretch of our presentation. So this slide, I hope you enjoy it. It is Sierra. It's time to level up. Can't use this slide for too long because I feel like this song's gonna get old. But now that we understand the foundation of how lenders use our credit score and determine our credit worthiness, let's uncover ways to improve our credit score. It's time to level up. All right. So just some quick tips here, okay? Quick tips. So if you've never had a credit score before, right? Here's how you can get your credit score to 700 in 6 months or less. Now, mind you, if you've never had a credit score before, first thing, get an installment loan, auto loan. Second, a credit card, using it monthly and paying it off monthly, charging gas, charging snacks. If you like Starbucks, going to Starbucks, charging the card and then paying it off right after in your mobile app. Making on-time payments is another way. For no additional inquiries. So try to keep your inquiries to 0 or 1. I mean, you could potentially do 0 to 3, but just try to keep it to 0. And then no new trade lines, no new loans, no new credit cards. All right. Now I gave this presentation to some friends, and one of my buddies, he didn't listen to me when I gave this presentation. He went to Best Buy, got his mom a watch. You know, he's acting in good faith. But that credit card, he already had one to begin with, but that credit card was from Best Buy. So that interest rate is high. So please don't do that. Also, another member after this presentation saw this slide and he went and opened up 7 credit cards. 7 credit cards. Like what? Remember, guys, you lose 15 points on every inquiry. So you can do the math, but that is a lot of points that he lost. All right. So also, our number one goal, again, is to help everyone achieve a 720 score in those 6 months time frame. So we can still help you, even if you haven't had credit score before. I'll touch on that as well. So not only does credit score impact you when it comes to loans and credit cards, et cetera, but it also impacts you in other areas, right? And so of the following examples, we're going to launch another poll. What else is impacted by your credit score? Okay. It's a long list here. If anybody is a student, you would know that some of these answers may or may not be right, because usually the teacher does certain things. I don't want to give it away, but yeah. Okay, yay, everyone got one right. Oh, never mind. Thanks. Okay, still good though, still good. We almost had it. If I would have ended it early, everyone would have got it right, but it's fine. Okay, thank you, tech team. We can end it now. The answer is G, all of the above. Sorry guys, my dog's coming in the camera, but all of these are correct. So auto insurance, your approval for an apartment, your security alarm system for your home, and your BG&E utility bill payment is also impacted by your credit score. Employment as well. So for me, when I had to get this job, my credit score was used to determine if I would be eligible for this position, and obviously a cellular phone plan. You also know that in marginalized communities, specifically Baltimore City, most residents can't even get a security alarm system because they don't fall in a specific credit score range. And then also, again, you may have to pay a down payment for your BG&E and utility bill. So here's some of the positive outcomes of improving your credit score. So you will most likely qualify for a mortgage to buy a home. You'll have lower interest rates, you'll have lower payments. The list could go on and on and on for these positive outcomes. All right, so if you already have a credit score, you've already been doing stuff on your credit, here's some tips for you, okay? So any recent delinquencies that you've had on your credit report, please bring those up to current. And I'm going to talk about that in the next slide. But if you are 30, 60, 90, 120, 150 days past due, if you are able to bring those balances current as soon as possible, like today, that will definitely drive up your score. If you had anything beyond this and they fall into collections, excuse me, you won't be able to repair your credit in that way, because once things fall into collections, don't miss this, you lose 150 points. You can't get those points back. So it's a big misconception out here. It's a lot of people that will tell you certain things, but we've seen this to be a fact. So when I talk about recent collection items, I'm speaking more about medical bills, but anything that is, a loan or credit type of collection, you will not get those points back. And then little or no capacity, right? So making sure that your credit cards are not maxed out and not reporting limits. If you had any bankruptcies, liens, judgments, repossessions, and charge-offs, there's sometimes ways for us to help you with that. But again, every situation is case-based. We can help more accurately if you take a credit score consultation with us. Again, it's free. I have a QR code at the end of this presentation for you to sign up. Okay, and then lastly, we are getting into the final stretch here. So identify how to protect your credit score from predatory lending schemes is what I want to touch on next, inaccurate claims and fraud. So I'm not going to spend too much on this slide, but there's 4 types of inquiries. Voluntary inquiries made by you don't affect your score. Ones that you pull on Credit Karma. Also, quick tip, you don't have to pay for these services. You can do it once a year from freecreditreport.com. You can do it through your financial institution, through the credit score simulator. The only time I would advise you paying to see your credit score is if you've ever been a victim of fraud or identity theft. But please do not pay for any of these services. You can get it for free. And then also, I touched on the last slide, but any alike inquiries when you're trying to get an auto or a mortgage loan, if it's in a 30 to 45 day period, all of those inquiries when they shop you around count as one. Involuntary, these are the annoying letters that you get in the mail, pre-approval, and then inquiries made for credit decisions with your approval. That's the hard inquiries, will affect your score for 12 months. And that's when you lose 15 points because it's a hard inquiry, not a soft inquiry like involuntary, pre-approval, or when Paul helps you out with your credit score, but the hard inquiry, number 4 right here, the impact on your score. All right, so as we kind of near the end, I wanted to highlight a member who we were actually able to help get their score to 720, but it's up to you guys to kind of protect and manage that score, right? And this is how they went from a 720 to a 600 in 6 months. So whenever you're 30 days late, yes, 30 days late, you lose 60 points on your credit score. Yeah, so you will drop from a 720 to a 660. That also means that your interest rate on your credit card, and this example is in the case of his credit card, his interest rate raised to 29.99% if he was 1 minute or 1 day late. What we found with this member is that this company, it's a bigger bank, they actually send in their team the day after the credit card is due. Won't name names, but you will find that any bigger bank or retail company will raise your interest rate. And so one of the homeworks I have for you today is to check your credit card statement. If you are 1 minute or 1 day late, it says it in fine print that your interest rate will raise 29.99%. And then anything after that, just continue to drop. 60 days is 645, 630 is 90 days late. This means that you'll be ineligible for a home because you need a 640 credit score. So the power of points is just it's just priority right here, right? 615 is 120 days late, which means you'll most likely be denied for luxury apartments. You'll also have a higher down payment on certain bills. And then 600 is 150 days late is where the score dropped to. So this slide is powerful. This slide just illustrates how important it is for you to pay off delinquencies and late payments. All right, so improving your score in about 60 to 90 days. how we protect your credit score, right? So one of the things that we do through our credit score consultation is we pay off your credit card balances. We do that by transferring the equity in your car or home. We call it a refinance. I was talking to your president today about that, where we take the equity of your car, we pay that off. The used car market is extremely crazy right now. So there's a lot of people who have equity in their car and don't know it. We actually helped my friend. She had about $16,000 in credit card debt, used the equity in her car, paid all of those off. Her credit score increased instantly. And so that's a quick way for us to help you out. Again, bringing a past due balance current, and then having a collection item removed. So this one I wanted to spend some time on. Let me see if this is on here. It's going to be in the next couple of slides. Do not use any credit repair agency. Do not pay for a credit repair agency. I was at a meeting today and someone said, why would you pay for a credit repair agency? You could just pay off the debt. I said, yeah, why would you do that? So also you shouldn't do that, because when they dispute things on your credit report, you lose 20 points. Yes. So if you're using a credit repair agency, they dispute something on your credit report, you'll lose 20 points if it's accurate. So please be mindful of that as well. All right, so tips for managing and protecting your credit score. Again, always have a credit card reporting a limit, no matter what, even if it's a credit card you had since you were 12 or 14. If you're tired of paying that annual fee, just keep in mind that your credit report and your credit score generates based on the length of time. And so you always want to keep those open. Keep low balances on your credit card, charge gas monthly, pay it off, make on-time payments, minimize inquiries, who you're allowing to pull your credit, minimize the number of new trade lines, don't get 15, 20 different cars, houses. And then lastly here, as we kind of end, protecting yourself and being very cautious of the following. Again, subprime lenders, and I will throw bigger banks into this category, that offer these 0% introductory rates. If you don't pay it off, they will charge you interest from the time you got that card. So that 12-month period, if you haven't paid it off, they'll charge you interest based on January to December, not December. They'll charge you for the whole year. So just be mindful of that. Beware of language again regarding default rates. If you are 1 minute or 1 day past due, you will have your interest rate raised to 29.99%. And again, this is my biggest one, avoid credit repair agencies. Why would you pay someone to help out with your credit? You can do it for free with us, all right? All right, and then obviously check the accuracy. So using Experian, using Credit Karma. My mom was a victim of identity theft, and I think this is really important because she caught it because she was monitoring her credit. So you can do that as well. All right, and then we are ending. This is our last slide. All right, so some of the action steps that you can do is 1, sign up for a free personal one-on-one credit score consultation. You can scan the QR code. If you're on your phone, I can send this out to your team. They can forward it to you. But also, if you follow us at Security Plus FCU on Instagram, you can click the link in our bio and you'll be directed to sign up for one of these consultations. It's a free service that we provide for the community just to help you out. Another homework or action step today is look at the late or due times on your credit card statements when you go home, just so you're mindful of that. And pay off credit cards, don't carry a high balance. Don't open up any new trade lines. And obviously, based on that diagram, no late payments as well. All right, so today we learned a lot of information. We learned a lot of information. We learned the importance of credit scores. We learned how it's calculated, what a credit score is. We learned how lenders use your credit score, and we uncovered strategies to build and improve your credit score and how to protect you from predatory lending schemes. So I hope that today, the work that we did together was powerful, that you learned a lot. I hope that I inspired you to get into the 720 club, right? Want to be in that club? I want to go to that club, right? So I hope you guys learned a lot. You can follow us on social media. For anyone that wants the link, I'll also obviously provide it to your team. I'll put the slide up as well. But the floor is yours for any questions. I know we took up a little bit more time, but I hope this presentation benefited you. I enjoy myself. I have fun. I hope you have fun. I love that Sierra slide. Every time I see it, I'm like, go ahead, Paul, you did your thing with that. But anyways, thank you guys so much. I appreciate you, and I'll open up the floor for questions.
Thank you, Paul. That was amazing. I enjoyed your presentation. Let me introduce myself. I am Cindy Penn, Target 3 co-lead, and I am excited to have all of this information for understanding, managing, and protecting my credit score. And it is so important for me, and I know it's important for a lot of people because we have so many participants here this evening and on Zoom, as well as our Facebook live stream. So we're going to open the floor for questions because we know that building and taking advantage of good credit is very beneficial now that we're back outside. So we have 2 questions that came in early while you were providing your presentation. So I'll read those 2 questions and then we can take questions from the floor. I see Ms. Chanel has a question, but let me ask the 2 from early on. The first question is, what about if you close a checking account? Does that affect your credit?
No, it doesn't affect your credit. But if you have a business account and you're trying to get a loan, I would advise weighing all your options before you close out that business checking account, because they typically look at your activity in that checking account in order for you to get a loan. So that's a good question.
Yes, thank you. Okay, so the next question is, can you explain the variances in score calculations for FICO 2 versus FICO 5 versus FICO 6?
Okay, that's another good question. I would say that you don't really have to worry about that at all, because those are kind of like, I guess, myths and the variations. A lot of, even our instructor with CU Strategy spoke to that. You know, the true FICO score is your TransUnion score. A lot of different lenders and institutions may use the major bureaus, but again, the FICO scores have patents on them. So no matter what type of FICO score, you won't really know because of the patent. They don't widely share that information. Hopefully that makes sense. But however, if you are using any of your financial institutions, they do send you a FICO score every 30 days, which is most closely accurate. And so I would just lean more heavily on that one. I obviously don't know why they deferred, because they have a patent on their scores. And there's been myths and things that come out about the changes in the FICO score and the differentiation between all these new ones that are coming out. But we will never get that information as a consumer. So hopefully that makes sense.
Okay, that was a great question. So now we'll take questions from the floor. So if you want to raise your hand and come up, we can pass you the mic for your question, but we're going to start with Ms. Chanel. You can ask your question and come off of mute.
You could try again.
Hi, can you hear me?
Yes.
Hey everyone, I'm Chanel Parker. Thank you so much for having this event. Hi Paul, and this is my husband, Parker, David Parker. We both attended Stevenson University, so shout out, go Mustangs.
Shout out to Mao. I see you, Paul. Proud of you.
Yes, I see you, David. Thanks, bro. That's big bro right there. Okay.
Right.
But yes, we have a question.
So this question, I know you kind of touched on it a little bit when you spoke about credit repair companies. I know that one of the things that they do, they'll try to send in letters to have inquiries removed. Now, based on what you said, do you recommend not doing that yourself as well?
That's a really good question. Sorry, my dog jumped up as soon as you answered that. So I love that question because it's always recommended to have language in these letters that state remove and not dispute. So the reason why I say don't use credit repair agencies is because FICO has cracked down on a lot of those agencies. So whenever they see the word dispute, they just automatically impact your score and they'll drop your score 20 points. And so it's okay for you to reach out to those agencies and write letters. I generally love to say, like, working with a credit union or another financial institution to help you raise your score is more beneficial than you most likely reaching out. We actually do this often as well when we're trying to raise someone's score, is we'll reach out to the agencies ourselves and will do the work for you so you don't have to do the work. But that's a really good question. If you already started that process and you're trying to get stuff removed from your credit report, if it's accurate, you may end up losing the points, but you'll gain it back. So if you've already done it, obviously don't be frightened by that. But if it's accurate, only is if it's accurate, will you get those points back? So just be mindful of that. Hopefully that answers your question, big bro.
Thank you.
Thank you.
Great question. Thank you. So next up, we have Najee. I hope I pronounced your name right.
Yes, that's right. Hi, you guys. My name is Najee. Hi, Paul. Thank you for the presentation. I just wanted to get a little bit more information. As a beginner, like getting into credit, how do you think would be best to diversify your credit and get into, I guess, I see a lot of people, they'll be like, oh, they live off their credit card, they eat lunch off of it, they go grocery shopping, everything like that. But if you're used to using like a bank account and stuff like that, that might be kind of weird to transition it over. So how would you recommend someone that's just in the beginning, kind of getting started to diversify their credit?
That's really good. I feel blessed because I'm still really, really young. And so I'm not in your position, but I just got out of it. And so my recommendation is to open up a credit card with a credit union. I started with that. This is just personal experience. You're more likely to get a credit card with a credit union. Bigger banks, you can get like a secured credit card. That would be my first step, is trying to generate a score. A lot of people are scared of credit cards. You don't have to be if you're good with your money, right? Just pay little things on it. Just charge coffee at Starbucks when you're going out with friends and just pay it off. But also if you have an older car, you're looking to get around, get something more reliable, that's another way. Or if you have good family, okay, I don't know about this one. You can ask them to put them on your credit card if they have a really good score, just so that you can start to build credit. But you have to be mindful of that because if anything ever happens to them, God forbid, you're going to be responsible for that debt. And so if you were younger, I would say I teach a lot of younger people as well to ask their parents to put them on credit cards. That would have been one way as well. But just starting out very small, and you can get a credit card with a low limit. You don't have to get one that's $20,000. Don't do that one. Start at a credit union, get one that's $500. Start small, and then you can get it raised, and that'll help your credit score as well.
Okay, thank you so much.
Thank you.
No problem.
So Natalie, did you still have a question? I think your hand went down.
Oh, no, I do. I still do.
Okay, good.
Alrighty. So thank you, Paul, for your information. I really appreciate you taking the time. You were going to talk about, and maybe I missed it if you went back to it, about having a collection item removed. So if you did it, I apologize, but could you explain it again on the steps to do that?
No, that's good. So having collection items removed is good. You've already lost those points, so you won't get them back, but they do reflect negatively on your report, your credit report. And so you can reach out to these lenders who are kind of reselling these debts, because when you don't pay it off, the collection agencies just resell that debt. And so you can reach out to them. I didn't touch on it. That's why it's a really good question. You can reach out to them for a settlement, because typically they want those debts paid off, right? They want those collection items paid off. So you can reach out to them, try to settle for a lower amount, and then get something in writing. Thank you, David, for that question as well, that says, once you pay off this debt, they will remove it from your credit report. Remove it from your credit report, okay? Said that twice on purpose. So just make sure you're always mindful of that and that you follow up on that. Hopefully that answers your question.
It does. And once you do the letter, then that just goes to like one of the bureaus or goes to the actual collector?
Yeah, no, that's a good question. That's just a backup, just in case within the 30 days you don't see that it's removed. That's just to protect your credit score. So once you have it removed, you should request a letter. It's like a promise to pay letter almost from them, which they could email to you, etc. Actually, was on the phone with someone that my mom was doing business with. And I was like, listen, I'm from a credit union. I need this letter today. If I don't get that letter, it's gonna be a problem. So yeah, make sure you get the letter. That will be helpful. Also, if you have any medical bills that are in collections, generally they're more flexible because a lot of people have medical bills, especially our older members. If they, run into hardship, Medicaid wasn't a thing, whatever the case may be, they're more likely to have those items removed as well. But again, even though it's removed from your credit report, you still have lost those points. And so we can do other things to raise your score from the credit union perspective. But yeah, I hope that makes sense.
Perfect, thank you.
Thank you. So next we have Felicia.
Yes. Hello, everyone. My name is Felicia Parker. Thank you, Paul. This was great information. I do have a quick question. So I'm currently trying to start a business, assisted living program and assisted living home. And I'm hearing so much mixed messages about business credit line. Like, do you have any feedback on, like, we have my personal credit and business credit? Like, I'm the type of person, I don't like listening to what everybody say. So I wanted to know if you have any insight.
No, that's good. You got to use discernment, right? Got to use discernment. So I was actually talking about this with our business services rep. His name is Tony Carpenter. He would be the best resource for you. But I would say that your personal credit score, if you have an LLC or even a corporation, they will also look at your personal credit score. And so you need to get yourself right before you can get your business right. That makes sense. So now, obviously, I'm not the business services expert, but I do know that if you don't have a good personal credit score, you're mostly unlikely to get, business lines of credit. Also, they do things where they want to see 2 years of your tax statements or tax history. So if you don't have profit in your tax history, if you're always taking a loss every year, you're not going to most likely be able to qualify for certain things. Credit unions are more likely to take a chance on your business, especially Security Plus, because a lot of people who sit in our high positions are minorities. And so we are likely to empathize and kind of know the story. We go off the 3 C's, right? Character. We want to know, are you credible? Like, what's the story behind your business? How can we help you succeed? So hopefully that makes sense.
Yes, thank you so much.
No problem.
Okay, great. Next, we have Ms. Farrell.
Hello, this is Mr. Marcel
I'm
Farrell.
sorry.
No problem. How you doing today?
Evening.
Paul, I do have a question for you. Is it true that having your name on your credit report spelled different ways, as well as your address spelled different ways, can have a negative impact on your credit score? Would it have to remove those names off your report?
That's my dad, by the way. Yes. So.
Oh, hey.
Hey.
So if you have something on your credit report and it's different, so like you have different addresses, you have different names, etc., will that have a negative impact on your credit score? Is that the question in a nutshell? No, it won't. We try to validate everything. And so when we pull your credit report, we're not going to look unfavorably on your credit report just because things are inaccurate. We'll most likely reach out to you for forms of identification to verify it. But we're not going to deter you away from any type of loan approval, et cetera, because of it.
Okay, got you. Thank you.
No problem.
Thank you, Mr. Farrell. I apologize. So next we have Evelyn.
Hello. Hi.
Hey.
Paul, I just had a quick question for you. How much, as a more kind of recent graduate, how much would you say student loans impact your credit score?
Oh man, the student loan question, that's a good question. Listen, we all got it, right? We all got it. So, so when, from a lender's perspective, right? Because everything is from a lender's perspective. So we don't really factor in your student loans into any credit decisions. We only look at your mortgages, auto loans, credit cards, and negative activity on your credit report. We know that everyone has obviously student loans. Now that does impact your debt to income ratio. So it's nothing that we can personally do about that. I wish there was, we praying that Joe Biden would cancel student debt, but until then, what are we gonna do? So, but when it comes to these types of decisions, when it comes to any loans, mortgages, etc., there's also a lot of programs that can help with this. If you're a first-time home buyer, there's programs where they'll pay off all of your student debt if you stay in a home for a fixed amount of years. But also don't be fearful of that. I'm a recent college grad. We're gonna get there, we're gonna pay that off, but it won't negatively impact you unless you have like an insane amount of student debt, which I know some people do. We do also try to find ways to help you out regardless of the fact. So hopefully that makes sense. So the answer is no, they impact you, but we as a lender know that we're gonna see student loans on your credit report.
Okay. Thank you. I appreciate it.
No problem.
Okay, so now we have one more question from the chat. If you're listed as an authorized user on your parents' credit card, will that negatively impact your score?
Yes, if they don't pay it off or pay it on time. So sorry, I meant to say if they pay it on time, yes. If they do not pay it on time, it will negatively impact you. If they pay it off and they close out that account, it will negatively impact you. So obviously be mindful of who you're allowing to put on your credit card, but also who you are allowing to be on that credit card, because if you're on somebody else's credit card, they're not doing the right thing, they're not paying things off, they're maxing out that credit card, that could also impact you as well. So I always like to think of it as if they mess up and do wrong, then you're also gonna fall in that activity. So just be mindful of that as well. But obviously also if someone is an authorized user, etc., and you guys apply for that credit card together, then you're doing that because you know they have a good credit score. But life happens. We have something that calls the life happens loan because we know things happen. So if you ever find yourself in that situation, it's not the end of the world. We can offer solutions to help you out.
Awesome, thank you. I think we've answered all of the questions. So now I am going to turn it over to Shakitha for a wrap up.
Thank you so much, Cindy, for leading that Q&A. We had a lot of questions, a lot of things, comments happening in the chat, in the Zoom room, as well as Facebook. Paul, you have a very supportive family. I love.
Yeah, I do, right? My dad came. Yeah, I'm like, where are you doing out here?
And listen, we did get a message. The president receive a message because your auntie, Elder Kim, said you did not let her know about your program. So she's not happy, but she found out about it anyway through our promotions. But I love the fact that it shows that you're passionate about this topic. I love how you started this conversation off by saying that you are, dedicated to making sure that you help people to improve their lives. And when it comes to talking about credit, we get scared quick. Maybe I'm talking about myself, but when you talk about credit, it's like you talking fighting words, but you made this conversation so light, so fun, so interactive, and you broke it down, as my president will say, to the brake pads to make sure that we understood the importance of our credit score. So as we, draw this presentation to a close, I want to turn it over to you for the final thoughts. What is it that we can do right now to get our credit together? And, what is it that you want to leave with our participants as they leave here tonight to go check their credit scores if they're not checking right now?
Yes. So I would say this, right? Scan this QR code. All right. You can scan the QR code. You can get a free credit score consultation. That's one of the things you could do today. You can look at any of the due dates or due times on your credit card statements when you go home, right? And then lastly, I would just say that just be mindful of what you do on your credit cards, right? I'm a big shoe guy. I love to get shoes. But sometimes we know that these types of purchases can get you in trouble, right? If you don't pay them off and you don't manage that credit card balance. And so my final words in closing would just be to not be fearful, or that 3-digit number impacts all of us. If you need help, reach out to me. You could think of me as your personal banker, as someone who's in your corner. We are here to help you succeed. And again, we are here to positively change your financial future. I get passionate about our success stories and how we're able to impact people's lives. When I think of members who are widowed and are trying to navigate that new space, but also navigate how the loss of a spouse, which is a very tragic situation, how that impacts their credit score. And we're able to step in and kind of walk them through the process. Like, that is why I'm here. That's why I love my job, is to really change and transform lives. And so I just want to say thank you so much to the AKAs. You guys are amazing. I really appreciate your leaders for taking the time out to even have this type of discussion. It truly shows how much you care about your community. And so just wanted to say thank you guys so much.
Thank you, Paul. I want to say, first and foremost, thank you to Cindy and to Naya for spearheading this program. Thank you to our amazing tech team for always, being quick on your feet and troubleshooting any challenges that we may have. And to our community members, friends, families, thank you all so much for coming out each month every month to all of our programs. We value your opinions and your feedback. Tech team, if we can put that QR code up, if you can continue to share your feedback and your thoughts about the programs that we're doing. We want to hear from you specifically about tonight's program. What did you think about Paul's presentation? What do you think worked well? If there's some things that you think we can improve upon, the survey, it will take you less than 5 minutes and it's anonymous. We too want to make sure that we are providing programs that provide a significant impact in our communities. If not us, then who? We must continue to lift as we climb, and we want to do that through our programs of service. Again, Paul, I wanted to say thank you so much for a very interactive presentation. I learned a lot. I took a lot of notes. I was like, I gotta level up. In the words of Sierra, y'all heard it from Paul. From Sierra, we have to level up when it comes to our credit. And so that is what we are going to do. We challenge you all to take 1 or 2 things that you learned tonight and really apply them to your life so that you can change your trajectory. At this time, I will turn it over to my lovely president for final remarks and closing. Thank you so much. Have a good night.
Thank you all again for your active engagement. I mean, the chat was popping. I mean, we really got some great questions. Cindy Penn, phenomenal job as our in-house Oprah Winfrey for this important discussion.
Yes.
It came with the style and the fashion and the hair and everything. So thank you. That was awesome. Naya, thank you so much for your input as well. Paul, this was really enlightening. And audience, as I shared with Paul prior to us coming on stage, I guess I'll call it, I was also in the process of wanting to learn more. I'm in the 720 club, but I want to get to the 820 club. When I met my husband, he was in the 820 club, and I was trying to catch up. I still haven't caught up, but it was inspiring to have that kind of conversation with you about what are things that those of us that are even, if we're at good credit, how we go from good to great. And that's a conversation that our organization continues to have, is how do we go from good to great? Because it does open more opportunities. And just that first example you gave of the difference that Lizzie and, look, we don't even like the husband now. We don't even know.
No, we don't.
Lizzie and her husband, and that $12,000 that he was going to cost her over the time of that loan. I mean, it really shows you how important it is. And I had shared with Paul that because of the pandemic, a lot of the rates had gone down. And so I had reached out to my lender about refinancing my house. And because I was able to bring my credit score up only 28 points, I have now saved myself $500 a month with my mortgage payment. And that's going over a year. And, everybody in my chapter knowing we bought a beach house, family bought a beach house. So that's what you can do with extra money that you're not paying on credit cards, and you can get a nice investment property. And so it's important that I think we all have that knowledge that there are things you can do, even if you get far behind. And, you know, I was fortunate. I did have parents that at an early age said, you know what, we'll get you a little credit card. And I had a little Amex card in high school that was for emergencies. We'll talk about that later, another time. But, you know, it did, like, when you look at my credit report, I have credit that's 36 years old. I'm not that old, you know, well, I am, but still, you know, but my credit goes back, and my mom put me on things like Sears. So, you know, if you trust your kids, you know, or your younger siblings, it is a good way to help them level up financially with their credit score, because it's a huge gatekeeper, you know, for homes. And wealth building is all about being able to get a good credit score and be able to invest not only in yourself, but in property, you know, stocks, bonds, all those kinds of things. And you need to have the cash to do it. And having a good credit score is one way. And I think many of us that are on this call, please share Paul's information. Please share it, because this is free, a free resource that many who have found themselves in credit troubles have paid a lot more for basically what he's giving you, which is free information. Phone calls you could make yourself that you may not be aware that you could have made, but now you do know. And so knowledge is power, as they say. And as always, you know, we are here to be of service to all mankind as a sorority. That is our charge. And credit is an important piece of the puzzle in terms of uplifting our community, in terms of economic empowerment. So again, Paul, I want to thank you for bringing so much knowledge and understanding in a relatable way to our audience. And this will be on Facebook Live. We'll put it on our YouTube. So please, you all, please share. And if our tech team, I want to thank you for your awesome job tonight. And if you could please share the QR code. As our Vice President so eloquently said, we are always looking for feedback. She got me so scared about these surveys. I keep my phone handy at the end now, so I could take a picture too and do my survey. And please give us the feedback, because we want to know. You know, we're a new chapter. As many of you know, we were just chartered in December. And so therefore, we want to know what the community wants to hear and see from us, because we do have resources. And we want to explore our network even further to bring what we can to the community to improve the lives of the people in the community. So again, Paul, I want to thank you so much for taking the time, because this is volunteer, y'all. Like, Paul did this on his own time. So he worked a hard day and then got himself all dustied up again for AKA, and now we know his aunties are AKA, so that's good.
Yes, I got a couple aunties. My family gonna get me after this, but thank you guys.
That's like you should have emailed out your list, but Paul, we will definitely have you back, because this was so informative, and a lot of young people really were tuned in and really hearing, and getting started on the right path early is really that's huge. That's huge, because a lot of people don't get the knowledge, so they don't make the right choices. And they come off of college campuses without the information they need to empower themselves and put themselves in a better place by the time they graduate. So again, thank you to our community, to all the folks. We want to thank you all for coming, and we want to thank you for doing the survey in advance. And again, good night, and we will see you at the next program. Thank you all so much.
Thank you guys. Have a good night.
You too. Thank you.
Have a good night, everybody.